What is the ultimate role of the RSI indicator? What is the ultimate role of the RSI indicator? Good morning, good afternoon, good evening, bonjour, bonsoir, mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW 24 traders. For RSI trading, our website is www.Dayprotraders.com. What is the ultimate role of the RSI indicator? All right. The RSI stands for the Relative Strength Index. All right. The RSI is a technical indicator that compares the magnitude of recent gains to the magnitude of recent losses in view to determine oversold and overbought assets in the financial market. Now, I need to repeat this again to traders that are very new. The RSI indicator is a technical indicator that compares the magnitude of recent gains to the magnitude of recent losses in view to determine overbought and oversold assets in the financial market. Okay, so you get it now. So why do we need to know the ultimate role of the RSI? So what I've said so far is just the definition of the RSI indicator, the Relative Strength Index indicator, technical indicator that compare the magnitude of recent gain to the magnitude of recent losses, all right, in view to determine overbought and oversold assets. That's the definition. So don't get confused when we are talking about the ultimate role of the RSI and the definition of the RSI. These are two different things, okay? All right, so why do we need to explain to traders the ultimate role of the Relative Strength Index indicator? Now, if you are day trading, you are swing trading, you have been using probably the RSI indicator. But the moment when we explain to traders the ultimate role of a technical indicator, we see a great improvement. For instance, what is the ultimate role of the stochastic indicator? Now think of it for a second. Okay, what is the ultimate role of MACD? Think of it for a second. Now, the moment when we explain to traders the ultimate role of the tool that they are using, so you are using a tool, now there is a ultimate purpose for the tool. So you want to know exactly the ultimate purpose of the tool that you are using so you do not, okay, misuse the tool. The RSI indicator is a technical trading tool. MACD is a technical trading tool. Stochastic indicator is a technical trading tool. Now, the ultimate role of the stochastic indicator is to identify bullish and bearish divergences in the market. That's the ultimate role of the stochastic indicator. Now you see now, once you get it, you start using it more efficiently. The ultimate role of MACD, which we explain to traders, are 24 stock traders YouTube channel, 24 stock trader YouTube channel. Check it out. The ultimate role of MACD is to identify trending and non-trending financial instruments using moving average, divergence, and convergence. Now, there are more to this, okay? Now, let's go back to the main subject, my friend. What is the ultimate role of the Relative Strength Index indicator, or the RSI indicator? I will explain it to you today, and you will promise me that you will remember, okay? This is to make you laugh a bit, okay? The ultimate role of the RSI indicator, or the Relative Strength Index indicator, is to identify bullish and bearish financial securities in the financial market. Maybe I should repeat it again, all right? So the ultimate role of the Relative Strength Index indicator, or the RSI, is to identify, okay, bullish and bearish financial securities in the financial market. That's it. Forget about the definition, my friend. remember only the ultimate role of the RSI indicator. Now let's go back a bit to the definition, okay? Comparing, okay, the magnitude of recent gain to the magnitude of recent losses. So when the magnitude of recent gains, okay, is superior to the magnitude of recent losses, the RSI will be above what? The level of 50. That's the red line on my chart. I'm using the RSI period 14. All right? When the magnitude of recent gain is superior to the magnitude of recent losses, the RSI will stay above the level of 50. When the magnitude of recent losses is superior to the magnitude of recent gain, all right, the RSI will be below the level of 50. So think of it for a second. So what do we mean by magnitude of recent gain superior to the magnitude of recent losses? It just means that the bullish force is superior to the bearish force. Simple, very simple. So we have traders that are selling, traders that are buying. The price progression displaying higher lows, higher high. Okay, the bullish momentum is superior to the bearish momentum. The buying pressure is superior to the selling pressure. So the RSI will stay above the level of 50. But don't go away, my friend, because I have more to tell you so you do not get confused and you start using the RSI like an expert, okay? So look at the chart here, okay? So suppose you want to know whether the asset is bullish or bearish, okay? So here we are. The RSI came here, it said to you, okay, this asset, the Euro Canadian, is bullish. We are now on the daily chart. So at this point, I say to you, it's bullish asset here. But let me put the vertical line there so you may understand the challenge that traders face when they try to use the RSI in, like this, okay? So here we are, we had the RSI is went from the oversold, crossing above the zero line, crossing above the 50 level for the first time, telling us that this asset, the Euro Canadian on the daily chart, is a bullish financial instrument. So I'm going to put a line there, okay? Look what has happened. All right, look what has happened. A bullish asset, but look, it didn't go up at all. It just came down, okay? Yes or no? Stay with me because I have more to explain to you. All right? Now, I want to show you another example here. Here we are. I'm going to move my vertical line to this point, okay? So now the RSI crosses below the 50. It's telling that this asset is becoming bearish. That's the euro dollar on the daily chart. You can see it went down a bit. But few days later, quickly, here we are. The RSI has crossed above the 50. So you may be thinking, so 1 minute the asset is bearish, another few days later, it's now bullish. Okay? So you may be wondering, do I need this technical indicator? But let me clarify what I explained to you at the beginning of this video, the ultimate role of the RSI. The ultimate role of the RSI is to identify bullish and bearish assets. Now remember what I said to traders before, the price is the #1 indicator. So when the RSI is indicating to us or is warning us that this asset is a bullish asset, what do we need to do? We need the price to confirm, all right, the price, the #1 indicator, to confirm that this asset is truly bullish. So to avoid the RSI confusions, my friend, what we mean by RSI, okay, identifying bullish assets, you will see, look at this point. I want to show you something else. Look at this point. Why? Look at this. At this point in time, the RSI stay above the level of 50 for a long time. Yes or no? Look at this point. Between this point, look at that. This is from July to September. That's a long time. So here, the information that the RSI has provided for us here, that this asset is bullish, is true because the asset, the security, the stock, the currency pair has been bullish. It has been going up, displaying higher lows, higher high. But look at the RSI. Stay above 50 for all this time. It didn't go down. It just stayed above 50. It would be nice to have an indication like this all the time. But the point I want to tell you today, though the role of the RSI is to, determine bullish and bearish financial asset, one must always confirm the information with the price action. Look, why the RSI stay above 50 for a long time here? Because the market pattern is bullish. That's it. So the point I want to clarify to you today, so you may start using the RSI like a professional, is that when the RSI is above, when the RSI crosses above 50 for the first time, indicating to us that we have a bullish asset. If the asset is truly bullish, the price will stay inside a rising channel. Let me say this again. If the RSI crosses above the level of 50 for the first time, indicating to us that we have a bullish financial instrument, if the information or the warning that the RSI is providing to us is true, the price will stay inside a rising channel. Now you understand what I meant now. Look again, right here, the RSI stay below 50 for some time. You can see here, let's do it from here. You can see it stay below 50 except this point here. So all this time it stay below 50, okay? It's indicating to us a bearish financial instrument. A bearish financial instrument will be inside, will be declining in a declining channel. So whenever the RSI crosses below the level of 50, and we want to sell on the edge of a declining channel. On the other hand, when the RSI is above 50, indicating to us a bullish asset, and we want to buy on the edge of a rising channel. There is one more information, my friend. The main, okay, intention, or how should I put this to you? The intention of the person who has created the RSI, because you need to understand one thing very important, because if you are trading, for instance, okay, the TSTW24, you will know that it's for day trading. But it's for day trading for financial instruments that move fast, okay? So if, for instance, you are using the TSTW24 for swing trading, yes, it's possible, but the ultimate purpose or intention behind the TSTW24 is for day trading, okay? When you are using the TSTWSY as your A trading system, the intention or the purpose of that system is for swing trading. All right? You understand? So what I'm trying to clarify here, ultimately, the RSI is designed, the intention behind the RSI indicator is to trade, okay, financial instruments that are consolidating very often. This is another point I need to mention in this video. All right? Because it's an oscillator, so it's going from oversold to overbought, all right? So if we have a financial instrument that is in a horizontal channel, we will use the RSI, okay? We'll use the RSI overbought, oversold, paying attention. So we'll look for opportunity to sell on the upper side of the horizontal channel, and we look for opportunity to buy on the lower part of the horizontal channel, all right? But we want to know when and where we have a consolidation. A consolidation is a correction. So what is the consolidation correcting? Did we have a trend before? Because it's a low volatility period, so we have a high volatility period and then low volatility period. Now, I don't want to stray away from my subject. The ultimate role of the RSI is to identify bullish and bearish financial instruments. If the RSI is above 50, it's indicating to us that we have a bullish asset. So one can screen for stock looking for RSI crossing above 50. But that's just a warning. One must now look for an opportunity to buy on the edge of a rising channel. Like you can see here, here we are. If you look carefully, I'm going to remove my line here. I want to clarify this clearly to traders so they don't get confused next time. Look here. Here we are. What do we have here? The price itself is what? The number one indicator. So we have now the price in a declining channel, telling us that we have what? A bearish financial instrument. That's what we see. A bearish financial instrument will be in a declining channel. A bullish financial instrument will be in a rising channel. If it's neither bullish or bearish, it will be in a horizontal channel. Very simple. But now, using mathematics and and the software, we have created the RSI to help us. Okay, but do not forget. So here we are. You understand now why this information that the RSI was giving us here, that we have a bullish asset by crossing above 50 is wrong. So we can filter this out by looking at the price and say, look, the asset is in a declining channel, but the RSI has crossed above 50. It's a false warning. It's a false signal. But it's not a false signal as such. It is a false signal if one is misusing the RSI. It is also a false signal if one does not know the ultimate role of the RSI. It is also a false signal only if one does not know how to use the RSI. All right? So here we are, we will know straight away that, okay, a bullish asset should be in a rising channel. So I will say, okay, I'll accept the warning here, but I will only buy if the price breaks above the channel and find a support. So I'll be looking for opportunity to buy somewhere here, not inside the channel. But if I'm buying inside the channel, I know that, okay, it's a bit risky, but I want to give it a chance. Okay, it's a contra trend, the risk is high, but I want to give it a chance. I know what I'm doing, and I will handle it carefully. Okay? All right, you see here, that's why this one is not a good indication for us, but the information here is good because it has crossed below the 50. The price is in a declining channel. Well, my friend, we will look for opportunity to sell. Okay? So the ultimate role of the RSI is to identify bullish and bearish financial instruments. So the same thing, trader may say, you have to understand what I said to you at the beginning of this video, that it's a technical indicator that compares the magnitude of recent gain to the magnitude of recent losses. So if the magnitude of recent gain is superior to the magnitude of recent losses, we have a bullish asset. On the other hand, if the magnitude of recent losses is superior to the magnitude of recent gain, we will say we have a bullish asset. But in every case, we must look if the price is in a declining channel or in a rising channel. Okay? Or is it in a horizontal channel? The price must confirm the RSI. But I also explained to you that the RSI compares the magnitude of recent gain to the magnitude of recent losses in view to determine overbought and oversold assets. But the ultimate role of the RSI indicator or the relative strength index indicator is not to identify overbought or oversold assets. Otherwise, we may say that the intention behind the RSI is only to trade financial instruments that are consolidating, because otherwise it will become useless. Okay? But the ultimate correction, my friend, I'm trying to correct the misunderstanding about this beautiful, powerful trading tool that the professionals are using, the area where traders law, the RSI. But we need to clarify this. The ultimate role of the RSI is to identify bullish and bearish financial instruments. If we identify when the RSI is indicating to us a bullish asset, the price should be in a rising channel. Okay, all right. With the area where we can know whether it's too late. Okay, we don't want to buy when we are in the fifth area wave. All right, one example. Okay. On the other hand, when the RSI is below 50, we want to know. So here, this is a beautiful overbought. Here we know it's overbought. Why is it overbought here? This is a nice overbought. The price is in a declining channel, but here the RSI went above 50. This is a beautiful overbought. Look at that. So in view to determine overbought asset. So which asset is overbought? The asset that is bearish becomes overbought. Now you have to understand what we are doing. So what are you looking for? If you are looking for overbought asset, you should concentrate on financial instruments with poor fundamental. Yes or no? Financial instruments that are bearish. Yes or no? So if you are looking for overbought assets, look for assets that are with a poor fundamental or that are declining. Here we are, the RSI below 50. It popped its head out, went to the 70 level. The price is in a declining channel. If the price, so to clarify, the best overbought will take place when the price is in a declining channel. The best oversold RSI will take place when the price is in a rising channel. So here we are, we are in a rising channel. The RSI is now, look at this level, it comes down near, the level is now 37 here. It's come near, okay, it comes near the level of 30 and start changing direction. This is a beautiful oversold. Because, well, how do we know? It's oversold because the price in a rising channel and the RSI is dipping near the level of 50. But we can filter out this, okay, in a better way. So when we are looking for oversold asset, we are looking for financial instruments that are bullish, all right? They must go up, but people sold them down so much. So we say it's oversold. This asset is bullish. You shouldn't sell it as much as you did. So you oversold the bullish asset, okay? So if the asset is bearish and people buy it too much and it goes up too much, we will say this asset is overbought. But what we have noticed, traders will be using the overbought RSI in a rising channel. It's a risky trade, sometimes it works, but it's a contra trend. So if it's in a rising channel, we can ignore the overbought. Okay, we may concentrate on oversold that are taking place in a rising channel. Okay, all right, we can go deeper and deeper. But if the financial instrument is quite bullish, the RSI may not touch the oversold zone anymore. So it will skip one level and will use, okay, the 50 level as oversold. You can see here. See here is going between the overbought and the 50. So one thing you need to understand, if the financial instrument is very, very bullish, the oversold level will go up a bit. All right, you see, here you see you touch the 50 and start going up because it's become too strong and the RSI could not go below the 50 anymore. So we'll use the level of 50, okay, if we have a strong bullish asset as oversold zone. All right. On the other hand, if the asset is very, very bearish, we will use also 50, okay, level as overbought because you can see come touch near 50 and coming back down. But if we are in a declining channel and the RSI goes above the level of 50 and touch even the level of 70, that's overbought. All right, that's a purely overbought. On the other hand, if we are in a rising channel and the RSI dip down completely to the level of 30, that's oversold. We'll use a top-down trading method to trade it. All this this is not a trading signal, this is a trading setup. One must now use a top-down trading method, the setup, the signal, and the low-risk entry point. This is the end of this video about okay, the ultimate role of the RSI indicator. The ultimate role of the RSI indicator is to identify bullish financial instrument and bearish financial instrument. When the RSI crosses above 50, it means that the magnitude of recent gain is superior to the magnitude of recent losses. We have a bullish asset, but the price must be in a rising channel. If the RSI is above 50, but the price is in a declining channel, the asset is overbought. Okay. On the other hand, okay, if the RSI crosses below 50, it's indicating to us a bearish asset. The price should be in a declining channel. All right. If the price is not in a declining channel, but the RSI dip below the level of 50, we will consider that as oversold asset. Okay, it makes sense. We wish you the very best in your trading, and until the next time, enjoy yourself and be very happy. If you want to know more about RSI trading, RSI strategy, go to www.dayprotraders.com. Until the next time, enjoy yourself and be very happy. We are the TSTW 24 traders talking about what is the ultimate role of the RSI indicator. Speak to you soon.